Hello students. We are going to have the second session for the economic survey. Yesterday we discussed the key takeaways, basically the overall message of economic survey, what is happening in Indian economy, what is expected from Indian economy. That is what we discussed yesterday. Today we are going to do a trend analysis. Okay. So for the trend analysis, we have some very interesting graphics with the help of which we will do that. So let us look at it. So yesterday we talked about the global growth. Now we will have a breakdown in that. Now today when we are going to look at the global growth, we will have much more datas over there. For example, yesterday we did mention that global average economic growth is around 3.3%, which used to be 4.5%. However, is it live? Okay. Yes. Now, here you can see if we divide this further, if we open up the data and we see it between advanced economies and emerging markets, there is a very big gap. The advanced economies, OECD economy or developed economy as we can call them, their share or their growth is only about 1.7 to 1.9% in the last 3 years. Whereas for the emerging markets, their growth has varied from 4.4 to 4.2%. So this is the trend that we see. So that means developed countries are growing at less than half of the pace of the emerging markets. So this is some interesting statistics that we have here. The next is the PMI. What are we expecting from the global trade and global economy? So if we look at the services PMI, okay, services show an expansion. Over here, let's say this is the red line, or I'm making a pink line. If you're above this pink line, basically this 50, that means people are planning to invest. If it is below 50, that means investments are going to be reduced. So your growth will improve if the PMI remains above 50. And if it remains below 50, that means the growth is going to be negative or growth will go down. So this is what we are looking at the global average. If we look at the global number, the global average of the PMI here would be little less than 50 for manufacturing. That means in manufacturing, investments are reducing in the world and they're slightly above 49. Let's say it is stagnant. But in services, we are looking at a growth. So in services sector, if we look at, we see about 54 is the number. That means services are now expanding. This is a trend that we see in the global economy. Now, what about Indian numbers? So Indian numbers are these. I have written Indian numbers also. India's PMI for manufacturing is 57. 57 itself is a very healthy number. 57 reflects that economy is going to expand significantly. And 60 is in fact an excellent number. That means there will be very good growth in the services. So PMI is basically Purchasing Managers Index. So it is a survey that is conducted with the business people, business leaders, managers in the country. We simply ask them, are you going to invest more or less? 50 is the baseline score. If it is 0 to 50, that means their investments are going to be less. And the score is more than 50, that means it can be between 50 to 100, that means they're going to invest more. Generally, a number of 60, 65 is an excellent number. 100 is not something that we ever achieve. Above 80, 70, in fact, we never go. So 60s is a very good range to be in. So India's services are likely to expand and even manufacturing is likely to do well in the coming years. Then something interesting that we have also noticed. Yesterday also we were talking about the geopolitical issues. Yesterday also we discussed certain problems in the global trade, and that reflects us that the world trade uncertainty index is increasing. What do we mean by world trade uncertainty index? Uncertainty means we do not know what is going to happen. There is a lot of uncertainty. We cannot make rational expectations. Future is very wild. You cannot predict it. That is what it means. Now, why predictability is poor? Why uncertainty is high? In 2003, already it was high. 8.5 is not a small number. This should be below 5. 8.5 is already a high number, but when it is rising to 13%, then it is showing that there is something deeply wrong here. And why specifically you can link it to the election of Donald Trump in the USA, and he's talking about undermining WTO, he's talking about raising tariffs, he's talking about the threatening actions against other countries. That's why uncertainty is higher. The same happened when Donald Trump was elected earlier in 2016. Then also the uncertainty indexes, they record very high numbers. Similarly, geopolitical risk is also higher in 2024. And that is particularly because in the last year of his presidency, um, President Biden, he became quite desperate to finish the Russia-Ukraine war, and he allowed Ukrainians to use some high-end weapons on Russia within Russian mainland, which was never allowed earlier. So they allowed them to use their weapons even in the Russian mainland territory. And the war expanded very badly in 2024, particularly as it was becoming clear that in USA there can be a regime change. Next, India's growth remains close to decadal average despite global uncertainties. So, if you look at our growth rate, we have excluded the financial year 21 and 22, which were affected by COVID. If we leave those years, which were very badly affected by COVID, then in the remaining time period, you see that 10 years ago, our growth rate were very similar, and even right now, our growth rates are very similar. So, when the global economy was doing well, we were still doing reasonably well. But even when global economy is not doing well, we are able to retain that growth. That is something remarkable about Indian economy here. Okay. So if you look at agriculture, our agriculture growth is in fact better than earlier. Similarly, industries growth is also better than earlier. Although in services we are slightly down. And similarly, if you look at the share of the investment and consumption, did COVID affect our investments consumptions number? The answer is not much. In fact, if you look at here, investments have continuously increased since 2018. Meanwhile, you can also see that exports have also significantly increased as a ratio of GDP. Again, you can see they used to be 18%, now they are in the range of 21, 22. Okay. And meanwhile, imports have also increased slightly. Okay. For the last 4 years, they are in a range of 24. Meanwhile, increasing little higher at one point of time in 23. So if you look at the numbers, numbers are quite stable. In fact, you see improvement in them. So whether there is global uncertainty or not, whether there are global issues or not, whether there is Donald Trump or not, Indian economy's numbers are quite stable. And that is something remarkable here. Okay. Next, if you look at the external sector, okay. So merchandise trade balance is this. So this is the baseline. If you are below this line, then there is a deficit. If you are above this line, that is there is a surplus. So in services trade, we have a surplus. Earlier, this surplus used to be of $25 billion per quarter, but in recent time, it has increased to a range of $45 billion per quarter. 45 billion per quarter. So in services, we have a huge surplus. Meanwhile, in merchandise trade, we have a huge deficit. So that is also something we can see here. And if you look at the number, then these orange line, they represent the remittances. This number represents your services surplus, and this number represents the merchandise trade, products trade. So whatever is the loss in the products trade, we are almost able to cover it up through our remittances and services. So that is why Indian economy is maintaining its stability. That is why our forex reserves have also been increasing. And this green line shows the current account deficit, which fell down very badly in 23, but it has improved and it is close to -1 in the last, let us say, 7 8 quarters. So this is what we see here. So this is the long-term trend regarding the current account balance. Current account balance is very important because it is your money earned from regular trade, from regular activities. So if you are not going to have current account surplus, or if you are going to have huge current account deficit, then you are in trouble, because from other mechanisms, whatever money we get, that is a liability on us. That money can be withdrawn by people whenever they want, whether it is FDI, whether it is FPI, whether it is the NRI deposits, etc. So in capital account, those money that we get are liabilities. वो हमें वापस करना है कभी. It is better if current account gives us money. So since current account is not giving us money right now, so let's say we are aiming to minimize loss. So if we are able to maintain current account balance somewhere close to 1% of GDP, that is manageable. So that's what we can see here. Similarly, if you look at the banking, then CRAR has improved. This is something that we discussed yesterday also in the monetary policy. Capital to risk weighted asset ratios. That means banks have money to back up their risky loans. 16% money in comparison to the risky assets. Means any loan that bank has given out of them we calculate how much is at risk. 16% of that risky money is what banks already hold with them from their past profits, etc. Then India's PMI number. I already mentioned this earlier as well when we compared with the global number. And here you can see the trend. So June 21, this is where you see a massive decline. April 21 to, let's say, August 21. This was the COVID second wave. During COVID second wave, the PMI numbers went down very badly. This was the time when nobody was planning to invest. So Indian economy was in a very bad shape at that time. But if you leave this period, otherwise, our PMIs have mostly remained above 55, or services, if you look at, it has remained above 60 consistently in the last certain period. So PMI is quite healthy for India. This is also something that we can notice here. Let's move ahead. Then we have monetary and financial sector developments, the cart and the horse. So this is where you see decline in the NPA, gross NPA, non-performing assets, loans that are given by bank which are not coming back, on which bank is not receiving the interest or the principal. Those are the NPA, non-performing assets. So banks' assets are the loans given by the bank. And since bank is not able to recover them, the ratio is high. It reflects very badly on the banking health. So consistently year by year, you can see, or every 6 months or every year, you can see a decline here. In 21, they were very high at 7.3. Today they are 2.6. That means on average 2.5%, 2.6% of the loans that bank has given, on that bank is not able to recover money as per the norms. Meanwhile, if you look at the profitability of the banks, since NPAs are decreasing, profitability is also increasing. If bank do not get their money back, how can they be profitable? So if banks have to be profitable, NPA has to remain low. So fall in NPA, correspondingly we can see increase in the banking profits. So banking profits on average have increased to 1.4%. Okay, so it's a quite healthy number because banks do not have very high profits, unlike some of the other industries. Similarly, if you look at the bank's credit, how much loans banks have given out, despite COVID, despite all the international issues, you can still see that banks' credit has always increased continuously. This is also something which is remarkable. Okay, if you look at the bank's credit at present, it is growing at 11.8%. Okay, in absolute number, this would be close to 160 lakh crore. Capital market is not very relevant for us for UPSC here. Trends at least are not very relevant. So let's move ahead. And then the next topic that we are talking about is external sector, the international trade. Yesterday we discussed the trends, but we didn't get into the depth of the data. Let's look at the depth. So if you look at the trade uncertainty, you see a very sharp rise in trade uncertainty between March to September 24. And that was the build up to the US elections and assassination attempt on Donald Trump, which increased his presidential approval ratings, and his chances of winning also increased after that failed assassination attempt. It was becoming clear that Donald Trump is the favorite to win the American election. So before that, if you look at the peak of the global trade uncertainty, that was from September 17 to roughly September 18. Between this period, also there was high degree of uncertainty. This was the peak of Donald Trump presidency when he was raking up the issue of tariffs with China after almost 1 year into his presidency. So global trade uncertainty, you can see a very big imprint of Donald Trump on that. Then rebound in the global trade. So global trade, if you look at the last 2 year comparison, in 2023, global trade decreased. Okay, it always remained below the baseline. But this year, if you look at the 24, continuously there is an improvement in the global trade. Okay, despite all the international issues, etc. Then now let us look at the merchandise trade. So for the first 9 months of 2024-25 financial year, the export growth you can see here from roughly 317 to 322. Meanwhile, import growth from 506 to 533. As a result, you can see merchandise trade deficit has increased. So this number will be more meaningful when we get the number for the whole year, and that is something we will get by the May of 2025. When the quarter is complete, analysis is done, and by the April end, they release the fresh and complete data. Then, if you look at the non-petroleum and non-gems and jewelry exports, then excluding petroleum, the exports increased quite healthy. And similarly, if you also eliminate the gems and jewelry, then also you see a very decent growth. So, gems and jewelry and petroleum, these are something which we reprocess. These are something which we first import, then we process on those numbers, and then we re-export. Okay. So, if we want to look at something which India is primarily creating, then maybe we can exclude petroleum, maybe we can exclude gems and jewelry as well. So in our core strength, there is a consistent improvement. Then we have services trade surplus. Last we saw the merchandise trade, and this is services trade. So services export have increased very rapidly. Okay, from 252 to roughly 281 billion dollar. And if you look at the overall number, services are now almost touching the levels of merchandise. What was the merchandise number on the previous page? This was 322 and this is 281. So very soon you might also notice services export may surpass the merchandise trade export, because growth in services is far better than manufacturing exports, and for last continuous few years we are noticing this. Similarly, a massive improvement in the services trade surplus for the 9 months. Let's say by the time we end up the financial year, we can expect the services trade to reasonably cross the number $360 billion in exports, and the surplus you can expect this to be easily surpassing, let's say, $180 billion or $170 billion. This is where we see the ease of doing business initiative for exporters. So what all government has done for the exporters. So logistics hubs and investment infrastructure. Okay, similarly policies and number of other reforms that we have brought. So we are continuously trying to improve the exports. Meanwhile, if we look at the FDI, then there is something problematic here. Okay, while every year the inflow is good. In 2020, we received $75 billion, 18 went out from India. Next year, this was 82 versus 27, then 85, 29. Okay, and likewise. But now we are seeing that this gap is narrowing. In 23 April to November, this gap was $17 billion. This year, this gap was about $16 billion. That means, although money from outside is coming into India, but money is also going out of India continuously. That remains a major problem here. Okay. So this is something which is disturbing pattern over here. And even you look at the overall flow, then you can see the FDI into India are declining somewhat. Okay. So financial year 22, we received very healthy FDI, but then 23 they declined, 24 they remained the same. Okay. So let's see how this is going to perform further. Then where FDI is coming. So this is something to notice here, that earlier majority of FDI used to come in services, IT, financial sector, IT sector. But now it is coming in energy, cement, okay, construction, electricity, automobile. So these are manufacturing. So in manufacturing, the FDI is significantly and rapidly improving. So if you look at these numbers, then this is pointing to somewhat 25% to, let's say, 30% of the FDI that we are receiving is right now in manufacturing. So that is a good healthy indicator. So FDI is now coming more and more into manufacturing compared to earlier. Similarly, this is the trend of forex reserves. Yes. So if you look at the forex reserves, then continuously there is an improvement. However, there is a decline here for the first time that you see from September to December 2024. And that was because of withdrawal of the FPI from India. That is again an impact of Trump. After the Donald Trump's election, the expectations for US economy significantly improved. The money rushed towards USA from other economies. And this is something not just happening to India, but to almost all the other major economies, all the other emerging market economies as well. So you see a bit of a decline here. That is purely because of FPI outflow from India. Okay. Then we have inflation. And if you look at the inflation number, this green line is showing the CPI, dotted line is showing the core inflation, This blue line is showing the WPI. And if you look at the numbers are quite stable. Okay. So CPI, if you look at the core inflation is close to 4%. This is the percentage that we need to see here. And just for the WPI, this is the percentage number. WPI percentage is not reflected from here. WPI percentage is reflected from that scale. So at one point of time, wholesale price index was as high as 15%. But as we can see, core inflation has consistently declined. Okay. Meanwhile, the CPI has also remained quite stable, somewhere between 4 to 5%. And in the next chart, we will see this is also largely because of vegetable and pulses. So this is the headline inflation. That is what you saw there also. This trend, decline, then increase again. This trend, if we see here, once you exclude the vegetable and pulses, this green line is when you exclude the vegetable and pulses, then you see this inflation is largely because of these two entries. They account for majority of inflation or price fluctuation in India. Once you remove that, the remaining inflation in India is just 3%. Okay, that means they are contributing very significantly towards inflation. Then you can also see the impact of weather events on the vegetable inflation. So number of days with the extreme weather. So you see that that is increasing now. Vegetable inflation in percentage in time per month, and this is vegetable inflation in time plus 3 per month. Okay, and number of days with extreme weather event. So you can see there is a correlation between that. The year or the time where we have extreme weather event, similarly you see vegetable and pulses prices, they significantly increase. This medium term outlook we discussed yesterday in the key takeaways. This we have already covered. Now we will be looking at the infrastructure. First number is not that important because it is about Vande Bharat and the production of coaches. So that is improving. The production of coaches in India is significantly increasing. Similarly, the number of Vande Bharat trains have increased. But anyways, that's not a number that you need to bother about. ये उतना UPSC के लिए relevant नहीं होगा. But if we look at the regional connectivity scheme, UDAN, the number of airports under UDAN and number of routes under UDAN, every year number of routes under UDAN are continuously increasing. This is just 6 months comparison data. But if you look at the 5-year composite data, you see this number has improved from somewhere in the 240s to 600 today in the last 5 years. And number of airports, not a massive improvement, but still over there we see increase. So UDAN was aimed at to operationalize those airports which were not performing well, which were not so well connected. Airports, there are so many airports in India which are not used for practical day-to-day flights. For example, Hindon Airport in Ghaziabad. For example, there is an airport in Hisar also. For example, there is an airport in Faridabad also. There is an airport in number of cities. But those are not used. For example, Kushinagar Airport. For example, Gaya Airport. These are very, very small towns or cities. We created airport there, but we do not still have regular flights. But with the UDAN or digital connectivity scheme, that is what we have done. We have increased the number of routes and we are trying to connect more and more airports within India. Total number of airport in India are about 109. Out of them, 88 are now under regional connectivity scheme. Okay. Similarly, if you look at the average time for container turnaround, matlab means a ship enters a port, and earlier it would take 2 days to unload and load containers, but today it takes 30 hours. This is a significant improvement in just 1 year. This used to be at one point of time 1 week. Before Sagarmala Yojana, the docking time of ships used to be 4 to 7 days, depending upon which port they were. Similarly, if you look at the power, something very interesting here also, in terms of megawatt improvement, the power capacity addition year on year is also improving rapidly. Similarly, transformation capacity is improving, but that's not what is more relevant. This is what is more relevant here. The share of renewable energy in the overall energy composition. The total energy production in India is close to 480 gigawatts today. 47% of that is from renewables. And obviously, if renewables are giving you 47, then 53% is from the fossils. And this ratio used to be about 61 and 39, or 62 or 38 earlier. So massive improvement in just 4 years there. And this is what is happening. Renewable energy share is improving, reaching 50%. Similarly, you can see connectivity wise also there are significant improvement. This data is not very relevant. You do not have to remember. So let's move ahead. But improvement is something which is quite visible. Okay. Similarly, if you look at the rural infrastructure, then particularly the number of households that are connected for the piped drinking water, that has increased 5 times in the last 5 years, from 3 crore to almost 15 crore. So that's a massive improvement here. And similarly, if we look at the ODF, open defecation free status, this was the chart of the country earlier, and this is the chart of the country now. Okay, significant improvement. I think this year is wrong here. This should be 19. 31st March 2019 versus 2024. 5 year comparison it should be, not 6 months. Similarly, under Pradhan Mantri Awas Yojana, almost 1.2 crore houses which have constructed. These are not data which are very, very relevant. The relevant data or trends I've already discussed with you. Now, the industry. In industry also, business expectation index is above 100. It should be above 100, but then it shows growth. However, there is a slight decline if you compare from 2023 to 25. So yes, there is a slight decline, but still it shows optimism rather than pessimism. Meanwhile, there are sector specific numbers also, cement production, okay, and the steel production. So continuously there is an improvement over here. And if you look at the steel, for example, now our production is continuously above our consumption levels. Okay. Steel production is red line and steel consumption is green line. We have a slight surplus there. Meanwhile, textile export, if you comparison, imports have remained stable, somewhere close to $5 billion. But if you look at the exports, exports which used to be about $18 billion in 23 have now surpassed over $22 billion. And that's a significant number from textile. So textile exports are doing reasonably good now. And then similarly, electronics industry, you see a massive jump. From 2020 to 24, you see doubling in the exports. They used to be 500,000 crore or 5 lakh crore. They are now close to 10 lakh crore. Okay, so electronics exports have increased rapidly. Mobile phone is also a very big component of that. Similarly, intellectual property, okay, number of patents, number of copyrights registered. So this is about patents, that is trademark. Okay, similarly, design, copyrights, etc. So everything is improving there. So basically, if you look at the Indian economy, Improvement is something which is the continuous trend. There are some challenges for the medium term and long term, which we discussed in the yesterday's session. So obviously, we did talk about that banks deposits are not increasing that fast. Similarly, we discussed some of the other aspects as well. So those are concerns which are there. Similarly, if we look at the share of services sector in the gross value addition, in the last 12 years, the share of services sector has increased in GDP from 50% to roughly 55% today. Meanwhile, India's share in the global services exports have also significantly improved from about only 2% in 2005 to roughly 4.5% now. So India is becoming more and more important player in services exports. Servification is an important term. Servification is the process in which manufacturing and services are combining today. And no manufacturing is complete without services. And that is why even if we want to establish strength in manufacturing, services is important and key for that. So that is something that we need to remember from here. Servification. Remember this term. Servicification. Then we look at the agriculture. Now, agriculture is also an interesting story where we see the share of institutional credit means is credit or loan available from bank and other financial institution, that share has increased to 75%, and private money lender or non-institutional credit share is now less than 25%. So somewhere around 1971 to 1981 we see a very big jump. Okay, and since then we have been improving it marginally. In recent years also we see an improvement there. Similarly, the number of small farmers which are registered for institutional credit, this number has increased 5 times in the last 5 years. Means if you look at the improvement in the non-institutional credit, the decline is particularly in the small and marginal farmers. मतलब छोटे farmer अब ज़्यादा से ज़्यादा institutional credit की तरफ जा पा रहे हैं. Small farmers are able to move towards institutional credit. And similarly, micro irrigation, if you look at it, then it used to be very low, but let's say this was the growth between 2010-15. But from 15 to 23, you see almost 3 times growth. So micro irrigation, drip irrigation, etc., that is increasing rapidly. Although its share is still very low, we need to increase it further. So overall, we see a good improvement there. Not a very important number. So this is the share of the different power sources in India's overall capacity. 20% power is today from solar, or 21% roughly, whereas about 10.5% is coming from wind, and about 10.3 roughly wind and hydro, they have equal share. And then there are others where we have 3.5%, and then nuclear has 1.8%. So this as a whole shows green energy, and this is energy which creates emission. Over there 46% is coal, roughly 5.5% is gas, and remaining is diesel and lignite. So that is the share. So 47% today is from renewable energy and 53% is from non-renewable. So this chart shows the expenditure on social services, and this yellow bar shows you the actual number in terms of expenditure. So every year there is an improvement in the social services expenditure. Meanwhile, as a percentage of budget, also there is an improvement from roughly 23% in 21 to 26%. In 24, it was close to 24%, 17, sorry, and today it is improved to 26. So this is total expenditure. Orange chart, yellow chart, on the other hand, shows you the social services. So while total expenditure is close to 98 lakh crore, the 25.7 crore is roughly the social services expenditure. So more and more expenditure towards social services. Now, in schools, 97% to girls are covered with the toilets, 95.7 boys are covered with the toilets. So you can interpret these data. You are not going to remember those data, so do not bother about remembering them, but just try to remember the trends that everywhere you can see an improvement. Similarly, these are some of the targets regarding the social sector. So we'll share this file, you will get those numbers from there. And then we look at the labor market, and we are almost coming towards the end of our discussion today, which is about the trend analysis. So trend analysis had to be in the form of graphics. So if you look at the usual status unemployment, okay, or usual status employment, then you see an improvement. LFPR, labor force participation rate, then worker population ratio, then unemployment rate. So from 6% unemployment has reduced to 3.2% today. Meanwhile, we see improvement in LFPR and WPR. WPR, worker population ratio, has improved from 46% to 58% in almost 8 years or 7 years. Similarly, LFPR, labor force participation, has improved from roughly 50% to 60%. So more and more people are participating in the labor force right now. As a result, we see in the improvement on WPR. WPR exactly depends upon LFPR, labor force participation rate. Similarly, LFPR is improving, unemployment rate is falling. Let's move ahead. Then we see this long-term chart regarding the female labor force participation. Okay, so if you look at the percentage of women in the labor, so you will see every area you see an improvement here. Okay, so in Bihar, only 3% of women used to participate in the labor. Now 20% of the labor force come from women. In Uttar Pradesh, this has improved from 9 to 25. Similarly, in Haryana, we do not see the exact number, but we can see the improvement in the color, and similarly, you can see other areas. So Himachal Pradesh has the highest number here, and that has improved from 40 to 56. So while Bihar is improving, which was very low, even the states which were doing well have improved quite reasonably. So this is somewhat of a good indicator. Meanwhile, the growth in, for some reason, the growth in Andhra Pradesh is quite poor. But if you look at otherwise, then everywhere there is good improvement. Particularly Gujarat and Rajasthan are very massive improvement. Okay, so female labor force participation is increasing rapidly, and every state, there is no state where it has declined. Okay, so this is a very pleasant indicator. Then these are the basically the list of the schemes which were used to achieve that. Okay, and then eventually we are coming to the last area, which is AI, and this we also discussed yesterday. No number as such to show here. So this was the trend analysis. In the trend analysis, with the help of graphics, with the help of data, we show that how majority of numbers in our economy are improving. Although there are some areas of concern. So for example, credit to deposit ratio is a problematic because credit is improving faster, deposit is increasing at a slow rate. For example, credit increasing at around 12%, deposit growing at around 7%. So if this happen continuously, then soon banks will not have funds to give loan. Similarly, CDR ratio has increased. Okay? So that's it. Right now it's not a problem, but in future it can be a problem. So that's a indicator that we need to be careful about. Similarly, we've also talked about some of the other aspects. The global uncertainties can deeply affect India, and although Indian economy is not very badly affected by them, they still affect us quite regularly. And if global conditions would have been little more favorable, maybe India would have been growing at 7.5 or 8%, or maybe even better, who knows. So despite the global headwinds, we are doing reasonably fine. So this is something that we can notice here. And similarly, you can notice some of the other trends. Okay. So in banking, we see massive improvement in the NPA numbers, improvement in profitability we showed you. Similarly, improvement in the CRAR. So everywhere, almost everywhere, there is an improvement. Although FPI, FDI, foreign investments in India have been a worrisome issue for India. Okay, FDI. Although FDI number in India that is coming from outside is reasonably okay, but money going out of India is increasing rapidly. The net FDI has declined badly. Meanwhile, FPI have created a big challenge and they've in fact reduced our forex reserves. So there are certain trends. So key takeaway, we discussed all the dangers to India in terms of its medium term growth challenges. So if you combine the yesterday's session, which was our session number 1 on the survey, and this session number 2, we will get the overall information. With this, we will end this session. Thank you. I hope this session helped you to understand the trends and the data. We'll meet again for another session. Thank you.